Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar bulls keep the upward momentum since the flash crash 7 days ago, and since then the market has staged quite a significant rally. On Friday, the market inked in a high of 72.34 after breaking above the 71.90 resistance. This is now almost a month's high. The Australian dollar may now have squeezed all the market shorts, that is, short positions. Therefore, at present, questions whether the advance has grounds of sustaining from current levels above 72 cents. Earlier, the Chinese inflationary figures released last Thursday missed the suggested forecast of 2.1%, with the CPI month-on-month coming in at 1.9%. Previous release was a little bit higher at 2.2. The PPI year-on-year forecast was also missed from 1.6% to 0.9%, with the previous monthly release higher at 2.7. Later today, we have China to publish what will be closely watched trade figures. Further expectations that we could see further declines would see the Aussie fall above 72 and look back towards 71.80. A break beneath there would give further information to the bear case to a target of 71.35.45. It is a little bit disappointing that the euro, since the break above 118.85, failed to uphold above 115. But the dollar index, which measures the greenback strength against a basket of 6 major currencies, surged on Friday, although still post its fourth weekly close to a decline. Last week, the Fed Central Chairman Jerome Powell said the central bank could be patient on rate policy. Data on Friday showed that the US consumer price fell for the first time in 9 months in December, which likely supports recent remarks by several policymakers, including Fed Powell, for caution about rising interest rates. So with the euro plummeting to a low of 114.57 does question whether the break was a failed break, and therefore could see the market turn back towards the support at 114.45, which is nearly where the low was. A break beneath there would give further scope to 113.80 to 113.1520, with resistance at this stage at 115.35. The focus is turned back to the resistance of this downtrend, which is at 108.6080 for dollar yen. A break above there would give further scope to the upside and bring in a target of 110.2025. It is assessed, though, that the bulls still have a lot of work to do, but nevertheless the technicals are rising and supporting a case of a further break. Failing to do so, of 108.6080 would still keep the initial focus to 106.6075. Well, the pound rallied on Friday, quite surprisingly, considering some of the news statements that came out. Ahead of a vote due Tuesday on the UK Prime Minister Theresa May's Brexit deal, widely expected to be voted down. However, sterling surged as a senior UK lawmaker privately admitted more time is needed even if the Prime Minister's deal wins the backing of Parliament. So, with the pound inking a high of 128.65, does it support the break? I'm not too sure, really, above 128, although from a technical point, still supports further rises. Therefore, we could see a move up towards 129 to maybe 130. Theresa May did go on to say that it would be a catastrophic harm if the referendum result was not implemented. Any pullback, though, support is seen at 127.70 to 127.25. Well, after numerous attempts at this level of 1,300 on gold, it still fails to break above there, and now ends by posting a doji candle. This in terms is seen as a gravestone candlestick. Therefore, the market could actually pose further threats to the downside. Some of you may or may not know is that the doji is a single candlestick pattern that indicates weakness and a potential trend reversal. The gravestone doji is the opposite of a dragonfly doji and has greater significance in an uptrend, as it indicates that the buyers were unable to push the price up, and therefore the market slips lower. So immediate target is at 1,284, maybe down to 79, with a base seen at 1,270 to 73. Do note, though, if we get a break above 1,300, because Safe haven demand is still the theme at the moment and could negate this gravestone doji, and therefore a break above 1,300 would give us a new target roughly around 1,350 to 65. And wrapping up with oil, well, the market failed to continue from the 52 level after posting a high briefly at $53.45 as the market now drops back towards 51.40. This has posted an outside range day. We do need confirmation of this signal to support a further negative case and see how the market plays. But it has opened slightly weaker again this morning, so we could see a fall back towards 51 or maybe down to 50.90. So do keep an eye on that. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new week.